Today, I'm going to show you how to trade EURUSD, the exact clean way professionals go about trading currency pairs. Now, I'll be using EURUSD because this is a currency that a lot of people trade. I myself have traded it multiple times and I know about its nuances. Most traders trade it, but that's not the only currency pair I trade. As a matter of fact, I have lists of currency pairs that I trade per time. And I usually don't go out of this list because that will only mean that I am going out of my experience on the charts, because the charts you look at all the time will eventually give you the needed experience to trade them confidently, continuously, all the time. Now, EURUSD is showing something different on the chart, and some people might think it's bullish, some people might think it's bearish. But what exactly is EURUSD doing? You wouldn't know if you are not a real trader. A real trader marks up their charts, knows exactly what the higher time frame is saying, and then works his way all the way from the higher time frames to the lower time frames to ensure that his decision on a trade entry aligns with what the higher time frame is saying. If you don't do it this way, you are not trading structurally. You need to be a structured trader so that you can get consistent results, because consistency in trading, as elusive as many traders term it to be, it's not exactly that. As a matter of fact, you can only get consistent in something that you have structure over. Where there is no structure, consistency can be bred. That's why I've decided to trade this way, so that you can see how to go about trading USD and probably use this approach in all of your trades. If you don't know me already, I'll let you intro about myself. I'm Kojas Pro, a swing trader, and I've been trading this game for over 5 years. By virtue of my experience in trading, I have come to understand a lot of things about the charts, and in this channel, I display my trading methodology. I go through weekly breakdowns of the chart to show exactly what the market is doing, so that traders that are not understanding what exactly is happening in the forex market and still willing to want to enter trades will get themselves aligned with what structure actually says. And I'll be doing that in this video. If you are new to this channel, subscribe. Now let's get into the chart. Now start on the monthly time frame, and a lot of traders are scared to come onto the monthly time frame to start the analysis, but that's what it is. If you want maximum clarity, if you want your trades to be aligned with what the market is saying from the market's perspective of things, you need to come to the higher time frame. And in this case, I'm starting with the monthly time frame because the monthly time frame gives the overall clarity. And for the monthly time frame, I will now go down to the lower time frames to ensure that whatever trading decision I make is in line with what the monthly is saying. Now, the monthly time frame, all I want to do on the monthly time frame is simple. I want to know the direction of the market. Is this market going up or is this market coming down? So essentially, is this market trending? If the market is not trending, it makes me lay back a little and not want to carry on trading this pair, because generally I like trending markets. I don't like ranges. You might try to force your trading strategies in ranges and you're going to hit a roadblock, because whatever trading strategy you have, once it's used in a consolidation market, it's going to break. So as much as possible, when you're an upcoming trader, try as much as possible to avoid ranges so that you can get better wins and better input for your time when it comes to forex trading. Now, coming to the question of the day, is EURUSD going up or coming down? I'll answer this question using two displays on this chart. Now, the first one is a trend line. We have a trend line here. Now, this is a trend line on the monthly time frame, and if you look closely, it's a downtrend. And has there been any point in this chart where the trend line has been broken? Exactly, right about here. So this trend line was broken here, and that just simply means that the trend is bullish. The higher time frame says that we have broken a major trend line, and therefore the trend has flipped from what it was originally to what it is now, means we are bullish. But a trend can be long-term bullish, medium-term, it could be something else. Understand? So that is why we don't trade on the monthly. The monthly time frame is just for buyers. You can't trade the monthly candles because those candles are massive. All these candles are massive. Within a monthly candle, you can find 4 weeks candle within a monthly candle. That's to show how massive it is. So you just can't trade the monthly candle. All you need from the monthly time frame is what the market is doing in an overall perspective. Now we have seen that we have broken a major trend line on the monthly time frame. Let's go over to the weekly time frame to see how we are arranging for this pair. Now, this is the weekly time frame. I'm just going to compress the chart a little. Now, the weekly time frame, I just want to do something simple. I want to know what are the key levels on this chart, and I'm going to mark them quickly. Now, in a broader perspective, this is what our key levels look like. So I've just had 4 levels marked up. Now, these key levels are going to determine how we take trades. The best way to go about trading and maximizing your profits in trading is trading, first of all, along with the trend, and also trading from zone to zone. So that's essentially why these zones are marked up. When you mark up your zones like this, you can be able to take trades from one zone to the next, and that's going to give you a lot of pips. Now, we are now seeing what was looking too simple on the monthly time frame to now be somewhat broader. As you scale time frames lower, the chart becomes more and more condensed, more and more bigger. Now, on the weekly time frame, we can see that this is where the market broke that major trend line on the monthly time frame, and we are now moving to the upside. Now, it's clearly seen here that this market has been moving in this fashion. So this market has been moving in this fashion. So this is technically what the trend line on the weekly time frame looks like. And we are well pushing more and more to the upside. But there's also something else we do on the weekly time frame, and that is to spot whether we are having any form of chart patterns that want to undermine the bias on the monthly time frame. Essentially, I want to know whether they are reversal patterns. And I can see here that there seems to be a range. I can see that this market ranged a bit here. Like it pushed to the upside, came back to the downside, still pushed to that level and came back below, and is now trading within what looks like a range. And when this happens, it gives me cause for caution, because I don't like trading into obstructions. I like when I am following the charts with what it's actually doing from a high time frame perspective. So if we are ranging on the high time frames, and I'm now scaling lower to the lower time frames to take a trade on the lower time frames, you can see that I'm not really marrying what the higher time frame is telling me and actually employing that in my trades. This is what a lot of traders do, but they do so ignorantly because they don't come to the higher time frames to see these things. So when you are trading on the higher time frames, just for clarity's sake, and you are seeing indecisions on the chart, why then will you want to take trades on that particular pair? That is why most strategies break at this point, because traders are going about their executions in a manner that is not congruent with what the high time frame is saying. So having seen this on EURUSD now, you can see clearly that the market played around here for a long time, created a pin bar at this point here, and has now begun to move to the downside. It moved to the downside and then came back and is now playing around that same range. Why then will you want to take a trade here? I mean, there are some strategies that say you trade ranges from the top of range to the bottom of range. Yes, I know that you can trade a range from the top of a range. Once you have identified that this is a range, yes, you can go about trading that way. But in fact, still remains that you don't have the probability in your favor because a range is simply a 50-50 scenario. And I don't like 50-50. So trying to force trades in this environment is very, very dicey. Now, going further, let's go over to the daily time frame to see what is happening on the daily time frame, to see generally what this pair is doing. Now, this is what the chart looks like on a daily time frame. And if you're a trader, probably you might have identified this point as a zone, and you want to begin to take short sales to the downside. If you are doing this, make sure you reduce your risk. And whatever risks you have, assuming you usually trade 3% per trade, you should reduce that risk to 1%, at least half or more than half of what you usually stake in your trades. Because whenever you're trading a market that is not obviously certain, you should trade cautiously. So if you're taking a trade from this point to this point, ensure that you've reduced your risk. And the thing is that if you don't have the high time frame bias, I'm just going to take this off for a second. Once the high time frame bias isn't known, and you come over to a chart like this, probably you're starting from the daily time frame as your bias time frame. It's okay if you're a day trader, you can use the daily time frame, but I'm a swing trader. Different approaches. I take my entries based on quality over quantity. Now, if you come to this chart, you must have seen this to look like a push to the upside, and it then broke this previous high. So there was a break of structure right about here. Now, we should have expected at least a little form of retracement halfway to be able to take more trades to the upside. Now, we did not see that halfway retracement, and rather the market came down all the way back to this point, even breaking the last low, which you can see right about here. So this last low was broken, and a lot of traders might have begun to think this market is about changing direction. But then all of a sudden, the market started pulling up to the upside. Again, this is confusion. The thing is that you are going about this trading the right way. The way I'm explaining to you is the right way to read the charts, to know exactly structurally what the market is doing. But traders don't have that skill. You don't have that skill to know exactly that this point right about here was previous support, and the market just broke it temporarily but has begun to push the upside. And in hindsight, it means that you are trading in murky waters. This place looks more or less like the bottom of a range. Now, when they come here and spot that these two levels have held, and now it seems as though the market has broken the last lower high, some traders will begin to think that this market is now pushing up. That is where you're going to be erroneous, because you are not reading structure correctly by just only factoring in this part of the chart that says we have broken the last lower high, and therefore means that we have changed trend. We haven't changed the trend because we are still trading below this zone right about here. It's only when we break above this level right here that I'll know that the market is now interested to continue a move to the upside. And the reason is because this was the previous level that was taken off by this high before the market didn't respect it anymore and went below it. So the market needs to come back above this level and hold above this level for me to realign my bias to being bullish. Now, this might look like advanced stuff. Traders might not be able to analyze in depth like this, but that's just what I am, because I am a highly analytical trader. And the reason why I go about my trading this way is because I want the probability in my favor before I take any trade. I don't like trading to obstruction. I like trading with clarity. If you feel that I'm wrong with my analysis, but probably by trading above this level, you feel that I'm still wrong, or maybe somewhere around here, you think that you would have traded profitably all the way to this upside with probabilities in your favor, tell me that in the comment section. I would love to read your charts as well. So currently, this is what EURUSD looks like at this point in time. We are ranging, and we are not taking any other trades to the upside until we break a major level. Now, coming back to the weekly time frame, you can see very well clearly that this level stands strong, and this was the area where a pin bar was created, and that pushed EURUSD back to the downside. So we broke above this level. To show you how important this level is, we broke above this level, and there was a huge selling rejection right about here. Sellers pulled in and dropped this bullish candle, this momentum bullish candle, back to merely a pin bar, and it closed below the zone. So this zone now is the contention zone. After the pin bar was created, the market rolled over to the downside. So it only makes sense that we need to come and trade above that zone, and then we'll know we are good to go. That is structure and clarity in play. Now, I'm going to come over to the 4-hour time frame to show you something, because some traders might be seeing this differently, especially when you're too zoomed into the lower time frames. Now, if you're looking at this chart on the 4-hour, you might have seen this point as a rejection. So this point right here might look like the rejection which you are watching out for, and the market came here and rejected with a pin bar, and obviously it's a rejection point because we have levels, we have reactions here, the third reaction, the fourth reaction, and then the market eventually rejected here nicely. So that's the level on the 4-hour time frames. And traders now seeing that the market is pulling back nicely, not even considering that this alone is an original uptrend. And when you are trading like this, the market only pulls back to a level, wherever the level might be, to continue to move to the upside. So we are not even bearish to start with. We are not even bullish on the other hand as well. We are ranging, and you need to know this by only zooming out to the higher time frames and knowing what the higher time frames is saying. And that is why I'm here on this channel. This is essentially what I do on this channel, to show everyone clarity on these currency pairs so that you can know how to place your trades with confidence when your setups emerge. You don't need to be forcing trades at the slightest reaction in the market. You don't need to take trades reactively. Whenever you meet a level, you don't need to start taking trades from that level. You need to wait for confirmation from the market. When you trade impulsively, you will be running into issues. So the market has pulled down for a while now, and if you still inclined to the fact that this market is bearish, you are not employing proper market structure in your trades. Let me know what you think about my analysis so far. Drop your insights in the chats so that we can reason together. Now, if you're interested in trading the way I trade, I have a free masterclass which goes in deeper into how to do this correctly. I'll put a link in the description of this video so that you can be able to join. There is also a link to my Telegram where I'm in constant communication with my subscribers to ensure that they are facing the market squarely for what it is. And I've also built a private community where I cater for beginners and struggling traders that are finding it difficult to build consistency in their trading. It's a community for serious beginners who want to stop guessing and start understanding the market properly. Inside this community, you will learn how to read the market with clarity, avoid impulsive trading, build structure and discipline, And most of all, develop the mindset of a real trader. It's got a 5-day challenge that's going to prepare you on what structured trading is all about and exercises to apply afterwards. This is where you build awareness, direction, and a strong foundation. So if you hate inconsistency, you hate blowing your accounts, you want to understand the market holistically and build a solid foundation in trading based on structure and discipline, go ahead and apply to join the community. I'll be happy to welcome you in there. I made a previous video about market structure and how to use market structure in your trading properly. If you're interested, watch the video right here.